Do credit inquiries really impact your credit score? I get this question a lot when I'm interviewing a prospective home buyer, and is it going to be a hard inquiry? Is it going to be a soft inquiry? Is this going to affect my credit score? And I was just reading on Experian.com, an inquiry by itself might be worth up to 5 points, but I can just tell you this, and credit inquiry is the least of your worries when it comes to your credit score. The two biggest factors are your payment history and your utilization of credit. The easy way to maintain perfect payment history, set up auto pay. Make sure you set up alerts for text messages and emails, so in the event there's some type of glitch, your payment was missed, you can take care of that right away rather than wind up with a 30-day late or worse on your credit. Your utilization of credit usually applies to credit card balances. It can also apply to a home equity line of credit. It's revolving credit. It's credit you can access again and again. You can charge it, pay it back, charge again. And when you have a revolving credit, you want to do your best to make sure a balance stays below 30% of your limit. Once you cross that threshold, you could start to see a negative effect on score. If you max out the account, if you go over the limit, you're definitely going to see a drop in score. You don't necessarily want to be a zero balance all the time. You want to have some activity on accounts. So from time to time, you do have to use the accounts to maximize your score. But you can't have new credit without having credit inquiries. Part of your credit score is based on your overall mix of credit and your ability to establish new accounts. If you're shopping for a mortgage and you want to look around and see what different lenders have to offer, you could have more than one inquiry. Well, here's the thing, the credit scoring models are built in such a way they can recognize that this is a very similar type of financing request. It's not like the individuals are trying to open up multiple accounts. They just want to see if they're getting the best deal. So those inquiries will be treated as one. The same can apply to if you're buying a car. If you've ever been to the finance office of a car dealer, you might be later surprised to find out 12 different banks all ran your credit the same day. And all of those inquiries are typically treated as one inquiry from a scoring standpoint. I think where most people get confused is that there's so many different scoring models, and the model that most see is FICO 8. If they're looking at Credit Karma, they're seeing a Vantage score, and FICO 8 and Vantage scores can be very similar, just depends at what point in the month the score is generated. And from the mortgage business side of things, it is FICO 542 that the mortgage industry utilizes, and FICO 542 tends to skew the lowest of all the models. And so when I talk to someone and they say, hey, my FICO is a 720, and I pull mine and it's a 690, they often think that the inquiry had something to do with that drop in score, and that's not the case at all. It's just that the FICO 542 model looks at credit differently, scores it differently, and therefore the scores can be 20 and 40 and even 60 points lower than what the consumer sees from their FICO 8 model and on their Vantage score model. I'm on both myfico.com for my credit monitoring as well as Credit Karma, and in the course of a given month, I can see multiple changes in my scores. On my FICO, I've seen as many as 25 different score changes in a month's time across the 3 credit bureaus. And the scores are going up, they're going down. Generally what I find is that if I charge up my revolving balances, I can start to see the scores drop. And as those balances are paid down or paid off, I see the scores improve. I've had everything on auto pay for a really long time, so I've had a good payment history. And those are the 2 biggest components of scoring. You shouldn't sweat the inquiries from time to time. If you're looking at buying a home, and whether it's today or a year from now, taking a look now to see what your credit looks like now in a mortgage lender's eyes on that FICO 542 model, and the lender can typically do a credit score analyzer to see what could be done to improve your scores to get you up to that minimum required for a specific program. Let's say down payment assistance with the Maryland Mortgage Program, you need a 640 or better. Or if you're looking at different financing options, and just 1 point in score could be a difference in price. A 679 score versus a 680, a 720 versus 719. Generally, getting to 780 or above would be ideal because usually that results in the best case pricing available. It also plays a role in your private mortgage insurance costs if you're doing conventional financing. And ultimately, higher credit score could result in a higher loan amount being approved via automated underwriting. So if you have any questions on credit inquiries, anything I can help you understand better when it comes to credit reports, please reach out. You can click on that link tree in my bio or in the description below.